Good morning, everyone, and thank you very much for joining me. This is the Morning Market Review. It's Monday, the 11th of December. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM. My email address, I'll just highlight, is rshaw@fxcm.com. Just going to go ahead and bring up our disclaimers. We'll start off with the high risk investment warning. I'll keep the screen for a few moments. Good morning, Kim. Pleasure to have you on the webinar. Hello, Mia, Raj. Thank you very much for joining. Good morning, James. Thank you very much for signing in, much appreciated. I'm just going to go ahead and change the disclaimer from the high risk investment warning. We'll just bring up the market commentaries disclaimer. All right, let's go ahead and take a look at our references, market scope and trading view. And we'll go ahead, we'll just take a look at trading view first. Go ahead and bring up the real rate. So we had some good data, or better than expected data, in terms of the jobs numbers that came out on Friday. We came in close to 200,000 in terms of non-farm payrolls, 190,000, and the unemployment rate actually crept down from 3.9 to 3.7. And I think most was the average hourly earnings came in at 0.4%. We were expecting 0.3%. Last month was 0.2%. All in all, what that resulted in the on Friday, and with the yield pushing up, let's just bring in the US dollar underneath. The US dollar pushed up as well. Okay, let's just bring in an arrow there. So this is phase. Okay, so I'm coming into the to the charts. All right, so this week's actually a week. We've got three major central banks. On Wednesday, we've got the FOMC releasing its rate announcements. I don't think that we will see any changes there. We'll just see what the tone of the statement is and the tone of the press conference and see if there is a higher for longer bias. Thursday, we've got two central banks. We've got the Bank of England, we've got the ECB. So those are going to be interesting to listen to, especially the ECB. The market's expecting the ECB to be the first central bank to actually start reducing rates. So we'll see what comes out of that. Tuesday, we've got CPI. We've got CPI, so we're going to get inflation data tomorrow. So it's a busy week. We're getting a busy week. And let me just see, I think there's some comments here. Yeah, Andrew's just asking if we can take a look at gold. We certainly can. Reference candle analysis on the real rate. Yes, certainly. Let me think, what is the way that we should do this? Well, I guess on the daily chart, we've got the low here at 1.934. 1934, here's 1937. Perhaps some sort of trough coming in here, perhaps. If there is a trough and the rate moving up, then potentially one would think the dollar is going to push up. That could certainly be the case if we get a hawkish FOMC announcement on Wednesday. By and large, by and large, I think that that's the most hawkish scenario, is kind of just having a higher for longer. You know, on the longer term weekly charts, it's certainly starting to show signs of coming down. I think the apex is in. The issue, of course, is what we said perhaps a week ago, perhaps a little more than a week ago, is if we take a look at the real rate and we put in a neckline. So let's just say this is a head. Let me just fix this up. Let's put in the neckline like this. So let's just say this is the neckline. We haven't really broken below the neckline. The right shoulder is starting to get a little bit complex. So I'm not quite sure if this is a head and shoulders. The danger for us as traders is if we stop moving down and we start moving sideways. And if you start moving sideways, that's going to be bad news for us, because if the real rate moves sideways, I think there's going to be some drift in the US dollar. If there's drift in the US dollar, I think that ripples through and we can see basic drift or consolidation. That's much harder to trade than trending movements. So perhaps a reference candle coming in here. Let's just keep an eye on that. There is a little bit of a tail coming in here, a selling tail, but the big deal here, Kim, the big deal is going to be on Wednesday with the FOMC, and really we want to see what the statement and the press conference, the tone is there, and if you know, if the market interprets it as dovish, maybe we come down. But if we start seeing some drift sideways, that's not optimal. All right. So let me know if that helps. We do have a downtrend in the real rate. If there is a reference candle reversal here and the downtrend holds, then what's going to happen is we get a sort of a lower peak. You'll kind of get something like that, and then, but I think it's really going to depend on the way the market interprets the Fed statement and press conference. Because we've got a downtrend though on the real rate, well, we've got a sort of a downwards bias on the US dollar, and what we can do is we can also do a reference candle analysis on the US dollar. Let's just see here, open high. Okay, I think if we're going to be really strict with it, instead of drawing it over here, maybe we can bring it down there. Okay, so a little bit of a challenge here for US dollar as well. Let's do US dollar analysis on MarketScope so we can do a top-down approach. A little bit more detail, I think, is required there. So let's go through to the week chart. The weekly chart still below 30-week exponential moving average. A 30-week exponential moving average is turned down, acting as resistance, but it looks like we're going to have another crack at it. We'll see if the US dollar comes through to the top side. If it comes through and breaks above that 30-week exponential moving average, perhaps we're getting some hawkish tones on Wednesday. So we'll watch that very, very carefully. It does have a bearish bias to it until proven otherwise. and it is below this 50-week, I beg your pardon, this 50 level on the RSI. I'm begging your pardon, but it has hinged heading towards 50. So it is a tricky chart. That tricky chart is really emphasized when we go down to the daily. So we go down to the daily, and you can see that instead of drifting into zone 3, we're actually going into zone 2. So we're in no man's land. So the fact that the dollar is sitting in zone 2 and it's in no man's land at the moment, I think makes it tougher for us, because we've now sort of lost this very ordered lower peak, lower trough, lower peak, lower trough. That's kind of been lost. So let's perhaps take out the labels here. Let's take a look at the US dollar as follows. So let's take out these lines, and let's take out the peaks and troughs as well. And what we can do is we can now start looking at it as follows. All right. We're in zone 2, no man's land. We're coming back towards 50. So that's effectively the line in the sand, isn't it? Is it going to cross above 50, or is it going to stay below? It looks like it's actually moving up. And if this reference candle reversal pushes us up and pushes the dollar up, then we probably cross above 50. Let's put another marker in for sort of bearish cross. Okay, so we're either going to break below this trend line. Let me try that again. We're either going to cross below this trend line, or we're going to cross above 50. Both very different ramifications, right? If we cross below the trend line, then the dollar coming down. If we cross above 50, dollar moving up. Well, if the dollar is moving up, that would suggest a flow into a safe haven. And if there's a flow into the safe haven, then potentially we're going to see pressure on the risk side of the market. So let's just reiterate. I'm finding the analysis here to be less clear-cut than it has been in the recent past. We do have a slightly bearish figuration on the weekly. It is testing this resistance level. The daily chart has moved into zone 2, and now we're really beholden to the indicators. The indicator going to cross above 50, or is it going to cross below this this trend line? And if we take a look at the hourly chart, there does seem to be some sort of bullish movement in here. And how do we know that there's bullish movement in here? Just go through to the stochastic. Go through to the stochastic. And as long as the stochastic holds above this 80 area, as long as it holds above the 80 area, then we kind of going to see this upward pressure. So what really was the catalyst for this upwards movement in the US dollar? And you can see that the volatility really increases over here. This is where the volatility really increases. So you get these sparks up, sparks down, and then so the market's seeming to be reacting to the stronger than anticipated jobs data. So perhaps because there is this higher average hourly earnings, perhaps because the unemployment rate has crept down, market now just a bit nervous about what comes out of the FOMC on Wednesday. What do we have between now and then is we have inflation. So the next big data point is tomorrow is going to be the inflation data. Now, what would happen if the inflation comes in hotter than expected? Gee, that I think would really drive capital into the US dollar. So a busy week, and it really started off with a surprise jobs number coming through on Friday. Andrew asking us to take a look at gold. So gold is going to be very much a mirror image of what we're seeing in the dollar. So the fact that the US dollar has started to move upwards, I think, is the reason that we're probably seeing some pressure on the gold price. What we can do is, let's just, before we go to gold, just remember that we're at the resistance level on the weekly. We want to just see there is either going to be a break above 50 or a break below this trend line. It looks like it's heading for a break above 50. And then we want to see if we're getting to zone 1. As long as we hang out in the upper quintile, there should be a bid for the dollar. Let's go through to gold. Okay, Raj, we'll catch up tomorrow. All right, so now we're just slipping this 2000 level. This is the hourly chart. All right, let's do a top-down analysis here. All right, we've still got a higher trough followed by a higher peak. The question, I guess, is, are we going to head towards a 30-week exponential moving average? And are we going to move above that? I'm going to put in some question marks here and see if that's the way gold is going to go. It really is going to depend, okay, again, on the tone. It's going to be on the tone of the FOMC and on the inflation data that comes out tomorrow. I still think that this 2000 level is an influential level. Let's go down to the daily chart and see what we can see there. And it's very much like the US dollar in that we're in zone 2. Okay, so it's an uncomfortable position to be in. Okay, the question is, do we break above and go back into zone 1, or do we break down below, go into zone 3? And it does look as if the pressure is to the downside. So the RSI slipped below 50. Let's just go down to the hourly, and what we want to look at here, Andrew, is the stochastic, to see if the stochastic hangs out in this lower quintile. The longer that we stay in this lower quintile, the more pressure there's going to be on the precious metal. Okay, so effectively, what we want to do, okay, is consider US dollar and gold at the same time. So go through to US dollar, because they complement one another in terms of the analysis. Take a look at the hourly chart for the US dollar and keep an eye on the stochastic. Okay, does the stochastic hang out in that upper quintile? The longer it stays up in the upper quintile, the more pressure to the upside. If it slips, okay, if it slips below 80, okay, then perhaps this resistance level over here influencing the dollar, perhaps the 30-week exponential moving average influencing the dollar. Let's just go back to gold. Just bear with me while I bring this up. Alrighty. Now, just like the US dollar hourly is in the upper quintile, gold's hourly is in the lower quintile. As long as we hold on that lower quintile, the more pressure there's going to be to the downside. All right. Let's keep in mind that gold is still trending up. There's a pullback now, and that pullback, the question is is it going to make the next higher trough? If it makes the next higher trough, then we move up. What do we need to see, Andrew, for that next higher trough? Well, we'll need to see weakness in the gold price. Well, what do we need to see? What do we need to see weakness in the dollar price? I hope I pronounced it right. Let me just start again. What do we need to see a strength in the gold price? Well, we need to see weakness in the dollar price. What do we need to see weakness in the dollar price? Well, we'll need to see inflation moderate tomorrow. Okay, so let's keep an eye on inflation tomorrow. And then let's follow through on Wednesday with the FOMC and see if there is some sort of give in the, if there's some sort of give in the in the tone and in the statement. There's an interesting question here. Is there going to be an effect from the 10-year auction today? And the answer to that is, well, yes, potentially there could be. It really depends what kind of a demand comes out of the auction, James. So a very strong demand will push price of bonds up. That will push yields down. If there's a softer auction, and prices don't find support, then of course what's going to happen is that the yield will increase. So yes, there is certainly an effect that the 10-year bond is going to have. Does that answer your question, James? Just let me know. Okay, cool. So there is, that's a good point. So let's just reiterate what we've spoken about today. What we've spoken about today is the fact that the dollar seems to be supported by the better than expected jobs data. The next calendar event is going to be inflation. If inflation shows moderation, well, that's going to be interesting. How does the interaction between a stronger jobs market and a softer inflation market, how does that interact with each other? And then it's all going to culminate on Wednesday. There's definitely not going to be any price increase or decrease on Wednesday. It's really a matter of whether there is going to be an emphasis on holding higher for longer. That's the key, or not. Okay. All right. Does everything we've discussed make sense? The market has changed up. It's much more complex. Why is it more complex? I just want to go back to that US dollar, and we'll just end off with the DAX before we end off. But it's become a lot harder. Sorry, I want to go to that, because we've lost this orderly ebb and flow. This ebb and flow has been lost. We had a beautiful downward trend here, and now it's starting to drift into zone 2. Always going to be harder for us. Let's just go through to DAX, just as a final chart to analyze before we log off. All right. So for me, this again, very, very difficult chart. I'll tell you why I'm finding it so difficult. The weekly looks great. The weekly looks like there is an underlying support. Go through to the daily, but we're just so overbought now, so overbought. What will be interesting is if we do get a movement up in the greenback, a push down in the DAX, and a normalization of the DAX's RSI, and just some sort of movement either sideways or down of this resistance level. I'm finding this chart quite complex, admittedly. Okay, that's where we'll leave it for today. I just want to mention on Friday, there won't be a webinar. Friday, there won't be a webinar, but we will have one tomorrow through till Thursday. All right, if there's any questions, please go ahead and type those in. All right. Cool, nothing coming through, so we'll wrap up here. I want to wish you guys a good Monday ahead, Have a terrific evening, and we shall chat tomorrow morning. Thanks very much, guys.